Palantir's fate is about to be decided. Something huge is coming to the company, and its stock could fly soon. But there's still something that could stop this. This is make or break. But what am I even talking about? Well, let me explain. Disclaimer. We've just entered the month of September, and this month is so crucial for the company and its stock. There are a lot of things that could either push the company to higher highs or make them stuck where they are. But this is just the beginning. Palantir has been gaining significant attention recently, as more people are beginning to recognize the immense value it provides to the companies and government agencies it works with. Palantir's software solutions, particularly in data analytics and artificial intelligence, have proven to be unmatched in the industry. This level of innovation and reliability has made Palantir a top choice for many investors looking to add strong, forward-thinking companies to their portfolios. And here's something interesting. This growing recognition of Palantir's value has been reflected in the market, with numerous analysts providing positive price outlooks for the company's stock. As more investors realize the potential of Palantir's offerings, the company is likely to continue being a strong contender in the AI and data analytics sectors. What do you think of this? Let us hear your opinion. In fact, the number of positive-looking price predictions have grown over time. A user on X even shared their own prediction for the stock price. They're looking forward to Palantir hitting around $40 within the next few weeks, which is a huge achievement for the company's shares if this does come true. But is this even possible? Well, here's how Palantir could achieve this. One of the key factors that could drive Palantir's stock price higher is the potential for the company to be listed on the S&P 500. This milestone could occur at any time, especially since Palantir has nearly met all the qualifications required for inclusion. Being added to the S&P 500 is a significant event for any company, as it often leads to increased visibility, higher investor interest, and a surge in stock price due to the automatic buying from index funds. And this is what's exciting about that. For Palantir, which has already been gaining traction among investors for its unmatched data analytics and AI solutions, this could be a game-changing development. The potential for S&P 500 inclusion is largely based on Palantir's ability to meet the stringent criteria set by the index. To qualify, a company must have a market capitalization of at least $14.5 billion, which Palantir has comfortably surpassed. Additionally, the company must demonstrate a history of positive earnings in the most recent quarter and across the past 4 consecutive quarters, a target Palantir is on track to achieve as it continues to strengthen its financial performance. Sufficient liquidity is also crucial, meaning that Palantir's stock needs to be actively traded, which it is, given its high trading volumes. All these are difficult to achieve, but Palantir has been able to hit these. But there's more. The company must be US-based, have the majority of its shares publicly available, and be listed on a major US exchange, such as the New York Stock Exchange or NASDAQ. Palantir already meets these criteria, making it a strong candidate for S&P 500 inclusion. If and when Palantir is added to the index, it could trigger a significant uptick in its stock price, driven by increased investor interest and institutional buying. Imagine the amount of institutions and investors that would be fighting over Palantir shares if they finally get listed to the S&P 500. But what do you think of this? We'd love to read your thoughts in the comments. Palantir's fate is certainly something that's of interest to investment firms and individual traders. After all, the upside is so huge. However, these are still all predictions and may not come true, especially if Palantir doesn't keep their current price movement. But aside from the market sentiment, another key source of Palantir's growth is their relentless pursuit of improving the operations of their commercial partners. And here's what you need to know. Palantir's commercial side of the business has become increasingly important over the past few years. While the company has long been known for its work with government agencies, its commercial operations have been growing rapidly. In fact, over the past 3 years, Palantir's commercial earnings before interest and taxes have grown at a rate of 30% each year, which is faster than the 18% yearly growth seen in its government business. This isn't to say that Palantir has been neglecting their government sector business. It's just the growth of the commercial sector, caused by the positive reviews of their partners, has been astronomical. And here's what's interesting. This shift shows that Palantir is not only strong in its traditional government sector, but is also making significant strides in the commercial market. This balance between government and commercial growth strengthens Palantir's overall business model, making it more resilient and diversified. But what's exciting is this. These impressive growth figures in both areas support Palantir's case for being listed on the S&P 500. The company's ability to expand so rapidly in the commercial sector while maintaining steady growth in government work highlights its potential for long-term success. This balanced growth pattern, along with Palantir's other qualifications, could help pave the way for its inclusion in the S&P 500 in the near future. And here's something even more exciting. Palantir is taking a big-picture approach that goes beyond just offering software solutions. The company is heavily investing in artificial intelligence and machine learning to make its platforms even more advanced. By doing this, Palantir is positioning itself at the forefront of the next wave of technological innovation. But this is just the tip of the iceberg. These improvements are likely to attract new clients while also strengthening ties with existing ones, which should help drive long-term revenue growth. Did this change your thoughts on the company? Let us hear what you think of them below. Financially, Palantir is in a strong position. The company expects to bring in more than $2 billion in revenue for 2024. Palantir is focusing on expanding its customer base in the commercial sector and increasing the size of its deals. This focus sets the stage for significant growth in the years ahead. And here's something more interesting. Recent contracts further highlight Palantir's growing influence. For example, the company secured a $250 million deal with the U.S. Department of Defense and is expanding its partnerships with major Fortune 500 companies. These contracts not only show that Palantir's technology is cutting edge, but they also reflect the increasing trust and reliance on Palantir's solutions across various industries. Overall, these strategic moves and financial outlook suggest a bright future for Palantir. The company is well positioned for continued success, which could be very positive for its growth and influence in the market. However, there's still something that could hinder Palantir's growth. Let's break it down. Palantir's stock has shown great potential, more than doubling in value this year as it has become a popular choice for AI-focused investors. But with this rapid rise comes certain risks that investors should be aware of. While the business seems to be heading in the right direction, challenges are on the horizon, such as the possibility of a recession and a potential decline in spending on AI-related technologies. One of the biggest concerns is Palantir's high valuation. The stock's price has already factored in a lot of optimism and expected future growth, which makes it a less attractive buy at this point. Without a significant boost in profits or a decrease in its stock price, Palantir might not offer the kind of strong future returns that investors are hoping for. Given these concerns, it might be wise for investors to wait and see if Palantir can continue to build on its recent successes and accelerate its growth. Here's what you need to remember. If the company struggles to maintain its current momentum, the stock could face a correction. As it stands, the stock's high price makes it a risky investment, and potential buyers should approach with caution. This serves as a warning to those considering an investment in Palantir. While the company has great potential, the risks associated with its current valuation mean that it may not be the right time to buy. Investors should carefully consider these factors before making a decision. But what do you think about this? Let us hear your thoughts below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.